I'm joined from Mitsubishi MUFJ Securities by Brendan Brown. Brendan, thank you so much for joining us in the studio. Now, we were just talking briefly about, US GDP, and we were just hearing from Linda about this 3-speed growth around the world. And you were telling me that actually you're not worried so much about the US, it's really about China and the commodities bubble there that worries you for next year.
Very much so. The US looks as if it's going to be growing on a 3 to 4%, maybe near a 4% growth profile next year. But the big risk out there in the global economy is the monetary bubble in China and the extent to which that's permeated over into emerging market equities and perhaps very importantly into commodities. These are the big hot temperature markets. And clearly there is a risk there, and a growing risk of some sort of upset.
But what would appease your mind? We're talking about some kind of possible interest rate rise in China. As soon as that happens, will you feel more comfortable with the way the world is going?
As far as the US goes, I'm fairly optimistic, even given China bubble bursting, in a sense that would bring down commodity prices and probably be good for the US consumer. But in terms of the investment space and the emerging markets, clearly the China risk is big. And it's not so much whether China raises interest rates or not, because in fact the way the China bubble bursts, if it bursts, is much more likely going to come through growing controls, growing cutbacks by banks in lending under various forced regimes rather than explicit interest rate rises, which is going to complicate the exchange rate management.
Now, Brendan, we had some pretty good US retail sales last week. Today is GDP. You're not expecting any surprise there. It's kind of taking it up along nicely?
Very much so. I mean, as regards to today's GDP data, what is probably most important is the export side. In recent economic data, official data anyhow, what's been a bit bizarre has been the underperformance of exports. But it's quite likely we are going to see some catch-up there, and whether that comes in today's data or not isn't clear. But looking forward, that's going to be a positive.
What concerns you the most? This possible QE3 from the US, is that going to hurt the rest of the world, or is there a chance that actually the US will raise interest rates too soon?
I think the main danger of QE2 is that it's contributing to the hot temperatures in the emerging market space and the commodity space, without much doubt. And we've seen it so often before where the US leads in terms of very easy monetary policy, it spills over into some other area of the world, and then that backfires.
Brendan, we're hearing more and more from market participants, but also now big bankers weighing in, saying that there's a real risk that the Eurozone is going to split, that we're going to have a couple of countries leaving because it's just not sustainable. What's your take on this, and what would it actually do to the euro? Are we going to see a complete collapse of the currency if there is, a default or a country leaving it?
My take is that the euro is intrinsically going to survive in terms of the European core, and that core will most probably continue to include Belgium and Italy, although some investors are doubtful about that. But as regards to the periphery, which includes Spain, 2 or 3 explosions are fairly likely in 2011, and those explosions will include some sort of combination of either EMU exit or sovereign debt revision downwards, restructuring. But that is not by any means going to be fatal to EMU. It's a bit like countries leaving the gold standard. They come and go, but the core remains.